Ankita, you're there?
Hey, hi Abhishek.
Hi, Ankita. Can you check your camera once and also see if you have that sharing option? You have a PPT to
Sure.
present or
No, I think I'll just mostly
okay,
just
okay.
talk about it.
No worries.
Have something prepared.
So we'll start in a while, just 1 or 2 minutes more,
Sure.
and we can start with you. Yes.
Sure.
रुचिया बताना कब स्टार्ट करना है?
Hey, Raj, beta. He's joined, yeah.
Yes.
Raj, beta. देखा
Abhishek, 3:35, we sharp start.
ठीक है.
Another 2 minutes maximum. We already have about 50 people. Another 2 minutes and we start.
So I think Ruchi, we can start, right?
Sure, please do.
So welcome everyone, and good number to start with. We've crossed 50, and uh, today, I'll just walk you through the flow, what we are planned to do. The focus of the today's Pragati event was how we can, what are the market best practices, how we can bring those practices to you, everyone, basis our interaction with the lenders. And so we have divided the whole session into three parts. We'll start with Ankita, who leads product and is AVP at Fibe, known as early salary, and she has been amongst the early adopters and a driver at our company. Followed by, I'll give you a brief session on what are the practices we have seen and come across. We have sort of created a compendium which you can refer. We'll share the PPT, followed by two TSP presentation. One is from Finbox and one is from Perfios team. So this is the overall construct. We'll hold up to you all for another 1.5 hours. So to start with, I think Ankita, we'd like to hear from you. What has been your experience? Five has been early adopter, and I see
Sure.
your active participation in our councils and the conversion also while having a good discussion with your team. I think we see that you are up the curve. So what has been the success of your mantra of account aggregator? We'll like you to brief the other participants as well. So over to you, Ankita.
All right. Thank you so much, Abhishek. Hi, everyone. Very nice to be here. Um, so I think, like Abhishek said, we have been one of the early adopters of. One second. Yeah. So we have been one of the early adopters of Account Aggregator. I think we've been in the ecosystem for almost 3 years now. I'll give you a little bit context about what Five does for those of you who don't know. We are basically a fintech company and we also have a lending NBFC. So we essentially provide cash loans and buy now pay later loans as well as a host of other financial products to our customers. Now, one of the key reasons why we really hopped onto the bandwagon when the A ecosystem started was because uh, the bank statement provision to the lender is a very prime part of my customer onboarding journey and was one of the key areas where I would have seen a maximum drop off because it is a very high effort step that the customer has to take. Now, I do need a bank statement for most of my cases to underwrite them and provide them with a credit limit or a personal loan limit that they can then utilize. So, anything that was helping me solve that particular roadblock in my entire onboarding journey was a very welcome change. So, we worked very closely with Sahamati from the early years to get onboarded to the ecosystem and then be one of the early drivers and early advocates of this whole system, right? So now that happened to us almost 3 years back, and that was an almost instant lift of the success rates that we've seen. The drop offs reduced drastically, the quality of data became much better. While the ecosystem had its challenges at that time, and they still do, I think, but there has been a phenomenal growth, and I think it will be fair to say that it has been a game changer for us at Five, and I'm sure I speak for the industry when I talk as an FIU and subsequently as an FIP as well. Right. So now, so this happened to us 2 years back, 1.5 years, 2 years back, where we saw that our total number of people who end up providing bank statement because account aggregator has come into this ecosystem jumped like 15-20%. And that, but we've lived with that for almost a year, right? Almost a year and a half. So that became old news in the whole fintech space because we have to continuously be doing better. So then we said, okay, what's next for us? And what's next was to then drill down really deep and then go and get that extra push and that extra 1%, 2%, 3% that we can get by doing some more initiatives, right? So what were those things? Like now our bank statements completion rate stood at maybe already 15% better than what it was, but now the effort and the time and the intelligence required for me to get from that 15% to the next 5% was where the entire difference is right now, because specifically of the volumes that we play with, each and every percentage matters so much to us that it's really worth putting in whatever effort we could. So there were a lot of things that we did. I think we first started with building a very deep understanding of what the ecosystem has to offer to an FIU. It varied from the funnel drop at each stage. What also mattered was what is the customer confidence, how comfortable is the customer giving the statement to me, what are the kind of screen changes that I could do, how could I engage in a more deeper way with TSPs, how do I get a better understanding of what an account aggregator has to do, or how is their personal relationship with a bank or a particular TSP plays a role in the entire ecosystem, because it had now come down to the last mile for me. So that is what the team at Five did. We went ahead and really worked there. So one of the things was to uh, build very robust dashboards which gave me a lot of clarity on exactly what is happening after I send a customer into the account aggregator flow. That was the first thing that we did, because until and unless I could really understand where is the scope, I couldn't go around to solving it. The second thing that we did was we identified that what are the reasons that a statement that I'm getting through account aggregator is not being processed by my system, right? It could be from the TSP that I have for the same, or we have also built a lot of it in house. So my second problem statement was to understand that why is that statement not being processed, right? Is it a bank problem? Is it a customer problem? Is it an ecosystem problem? Where is that problem stuck, right? So one of the things we found that some statements we got through account aggregator had very limited number of transactions, and because of which my system failed it. So we went ahead and put a check over there, and that's why we went back to the ecosystem and said that this is what we're facing. If the customer is giving a statement to me from an account aggregator channel or vis-a-vis a PDF upload, then the customer quality, the statement quality is different. So that was one of the feedbacks we worked on extensively with our partners, and I think that has significantly come down in my area of purview, right? Next thing, we found that a lot of customers wanted to have a place where they could change the account mobile number, right? So just to give a little bit more context, when we are doing lending for retail customers, there is a very high level of risk and fraud angle that we need to be on the lookout for, to make sure that we build robust and scalable products. So that was one of the problem statements in front of us, that if I'm allowing the customer to change mobile numbers, how do I make sure that the system is not being taken for granted, or the system is not misused in a way to get kind of a financial benefit. So we went and said that, okay, fine, what are the other data points that I'm able to get? Then I said, okay, fine, I'm getting a PAN. Let me go and see if I can do a PAN match at my system. What I got from the bureau versus what I'm getting from the statement. If they match, I will allow that statement. So we went live with something like this, and we've been able to provide loans to an additional 3,000 customers because of this. So that was something that really, it took a little bit of effort for us to narrow it down and to really solve for it, but I think it was totally worth it. Another thing we did was where we found that the customer did not really understand what account aggregator is. I think a lot of us, when we are working in the industry or are really updated with what the new initiatives are, we kind of face the challenge of really going and passing that on to the customer, to the end user, who could be really varied. Like a customer could be like, for example, Fibe we do checkout loans, which is buy now pay later. So it could be the parent of a child who's sending his or her kid to a school and wants to use Fibe to pay the school fee. Or if it's a mother or if it's a woman who's going and getting a treatment at Kaya and wants to pay with Fibe. Or if it's a really desperate customer who's sitting at midnight and wanting to maybe get a money for some medical emergency. So the use case really varies, and for me to pass on that education, and for me to let them know that this is not a high effort step, and to really change that perception was one of the bigger challenges that we faced. I think this is something that the entire ecosystem would benefit if this gets solved, or this is even more better than it is today. We understand that there are continuous efforts made by Sahamati. There was an RBI video that's put up on YouTube, that with one of the leading actors, that talks about how this is normal, how this is safe. So I think we also solved that to a certain extent. I wouldn't say we're through it. There are still adoption issues where people feel a little hesitant in using this, but I think we have come a really long way into doing that. So just by kind of doing the initiatives that I mentioned, we were able to get an additional jump of 7 to 8% which for the funnel scale and volume that we are speaking of and would be speaking of for the other partners also who are going to be coming up after me, is quite sizable. And therefore this happens to be very rewarding. The space is ever evolving and we always have something new that is going to come up. We are constantly looking out for what else is the industry doing, how else can we do better, because any improvement that I can make leads to a very significant change in terms of value and volume. So that has been our endeavor, and we will continue to be um, uh, adopters and advocates of Account Aggregator. I'll just take maybe the next couple of minutes to also say that we have been able to move past just the traditional use case of Account Aggregator, which is bank statement sharing, to a host of other services that can be used basis this framework. We have started exploring uses where we can rely on the statements or the data information that we are getting through Account Aggregator as alternate data sources, for example on customer PII, on a lot of behavioral aspects of the customers that we can get to know just because of their statements. So beyond income verification, we have also thinking and we're evaluating if we can move it around, see how else we can leverage, how to reduce the customer journey and place more reliance on the data that is directly being shared by the banks in our case. Another use case that we went live with some time ago was loan monitoring. Erstwhile, we were only using loan underwriting, but now we've also been doing loan monitoring for a while, and we have seen very good insight and have been able to build good models in house around predicting what kind of customer may or may not default, and hence it has really helped us improve the quality of the portfolio that comes in, and really work with our risk category as well out there. Um, Another thing that we are doing is PFM, which is personal finance management. So in this case, our list of FIPs expands to not just banks who are giving me the statements for the savings piece. There's also going to be a lot of other investments and insurer players and all of those people, so that I can get a more comprehensive uh, portfolio or information on the customer, and where I can solve for a personal finance management. So that is something that is already being built at our end. um, yeah, so I think like Abhishek said, we have been along for the ride and we intend on being with Sahamati for a long time, and hopefully both of us can grow together and benefit together from the ecosystem.
I think we have all went through that journey that when we were talking about 35%, 40% conversion to now,
Sure.
I have
Yeah.
seen myself a journey of where the end-to-end conversion went up to 72 to 75%. And this
Yes.
journey has been very encouraging. It's been 3 years for me as well in Sahamati. So
Like,
I've
like I
seen
said,
that.
any effort we end up putting here turns out to be so rewarding that we want to go back and then try and see what else we can do. So that is absolutely there.
So what I can pick from your discussion, Ankita, is that you have to eye on every data point, and even
Sure.
while you are monitoring the funnel, as well as I think what you brought a new thing was even if you are unlocking and adding one more mobile number and linking the other bank
Yeah.
accounts, you are able to actually get increase the eligibility or maybe
Absolutely.
underwrite more customers. That is one thing which I think I can
Yeah.
take it up and as a
Yeah.
learning for us, and we'll see what more can be done. And also
Yeah.
customer education, and as a industry, we all have that duty that, and also
Yes.
we want to have collaborative efforts in terms of spreading awareness of account
Yeah.
aggregator.
Yeah.
So I'll thank you for your session, and Ankita, looking forward for more learning from you, and uh, uh, I will really like that the industry can come together and help us build this ecosystem at a scale.
Absolutely.
Thank you.
Thank
So
you so much for having me, Abhishek.
thank you, Ankita. So I'll just 10-15 minutes more. What I can do is I'll just share you short presentation. Um, and the my presentation is divided into two parts. Am I audible, Ruchi?
Yes, you are audible, Abhishek. You can be slightly louder, but you're audible.
Fine. So yeah, my presentation is divided into two parts. I'll quickly run you through the latest numbers and latest update on Account Aggregator. We have seen that ecosystem is growing. Not only the number are increasing, the depth of use cases which are coming up and the adoption status at across FIUs have increased. Uh, in terms of FIPs, we have 179 FIPs, wherein around 212 crore of financial accounts are currently live on Account Aggregator. There are around 731 FIUs now across 15 license types, which have already seen 28.9 crore of cumulative consent fulfilled, and 16 account aggregators, wherein there are around 20.8 crore account cumulatively linked till date. So more or less around 10 to 12% of the overall adult population would have access and done account aggregator journeys. The current number, when we see every month, we are seeing successful consent fulfilled number is around 1.5 to 2 crores. When we talk about 731 FIUs, we are majorly NBFCs, lenders are the ones who are dominating in terms of number and the usage. But yes, we are seeing the use cases across insurance companies, your stockbroker, PFN, wealth management. And this is a split of the different categories of FIUs. When we quantify numbers in financial year 25, NBFCs contribute to the major usage of the account aggregator framework. Around 60% of overall consent fulfilled came from NBFC side, and lending is one of the most important use case in account aggregator. On a data provider side, we have 179 FIPs, as I said, covering around 60% of overall financial account, which would be there live in the universe, overall universe. Public sector, major private sector banks are live. Uh, there are around all the RRBs are also live, and we are working on bringing in cooperative banks, payment banks as other data providers as well. The coverage across GST and NPS data and your DMAT or depository data is 100%. There are around 16 data types which are live when we see different data providers. So on the right hand side, you can see the list of all 16 data types which are available. So I remember in my early career, we used to always talk about minimum data, but I think now we are graduating in terms of abundance of data. And as Ankita said, that how you can use even banking data in to build models and get more insight apart from just underwriting normal use cases. Now we have a plenty of data which on customer consent, the lenders or the users have to design their systems, VREs, to absorb this data to give more personalized advisory or maybe or customer or product offering to the end customers. Uh, as I said that there are around 212 accounts which are enabled. Uh, right now we are working on enabling and pushing for joint accounts, small savings schemes, CPFO, and CBDT data. Also, the coverage on FD and RD is something which is being worked upon in terms of getting them onboarded wherever it is not done. GST, we have already given a proposal of adding the purchase side data, which has been an industry ask for a long time. These are the numbers from the latest survey which we did. The numbers are very encouraging. If you see in FY25, the just half bottom half, and on the top you are seeing the cumulative data where the total disbursement is around 1,50,000 crores. In FY25, the number is like more than 50%. So the number month year on year and half yearly growth has been tremendous. These numbers come from cumulative. We have around 164.3 lakhs of loans disbursed. In FY25, it was 122 lakhs. We are seeing strong decrease in terms of we seeing a lower average ticket size of the loans being offered through account aggregator, reducing from 91,000 at a cumulative level to 88,000 at a for a FY25 numbers. Coming to the second part, which is topic for the focus for the today is what are the steps which you can any FI you can take in terms of increasing the success rate of account aggregator. And uh, till now we have seen where have we come on the account aggregator journey, what are the latest numbers. Now we want to really see what actually drives adoption. And I think it is more of a cultural mindset shift where A has to be looked at as a business growth driver rather than just as a utility or way of data exchange. So this shift will come. The slide shows you three sections, and the first section being the strategic enablers, where the leadership team has to make the AA as a default option for data collection. So when you see if you want to drive adoption at a level where the AA can be built in across different lending journeys at different life cycle of the loan product, it has to be a top-down approach. And if as a whole company you have to decide that if you think that you have to bring in a big change management in terms of pushing towards account aggregator, these are the three sections you have to work upon. At a strategic level, you have to see that A become a default option for data collection. Many of the lenders we have seen that in their journeys, how they have staged account aggregator is that when the option of sharing the data is given to the customer, A is the only option which has been shown to them. And once the customer goes through the journey and they see that there is a drop and the data doesn't come, then only they unlock the other utility or the other way of sharing data, maybe via upload, via net banking, or maybe scan documents upload is something which they enable. The second level, what you can do is at a strategic level is maybe there are three, four options of data sharing, but you ensure that A is highlighted and it has added with a trust market that this is a preferred way of data sharing versus the traditional mode. The increase in adoption of A, we have seen that co-creation of journey when lenders and A is co-create the journey and the UI UX is being done and in such a fashion that the customer don't feel that it is landing into another new interface, and the chances that he doesn't drop off reduces a lot. Also, Sahamati has worked with the industry on fair use guidelines where we have capped the maximum uh, range of different consent parameters. So you have to ensure that you are aligned with the fair use guideline because now with fair use guidelines being implemented by the AS, if any of the parameter which is breaching the set value will be rejected at AA level. And we are seeing that banks have also implemented these checks. So maybe if AA is not able to stop this consent, the FIP level, it gets dropped. So you have to see that these are the means that you can increase adoption across AA. On a operational point of view, we are seeing that actually say training your sales team, credit team, and operation teams uh, really have an impact because now you can actually pass on the team is confident enough to ask documents through account aggregator, and they are also well aware about what account aggregator is, and they can pass on that confidence to the end customer. There are journeys which are very well integrated, and we have also seen journeys where the FIU is just taking a dashboard which is being run at or given access to the central team, and the sales team goes in the market and ask the central team to push message and the journey. So there are broken journeys. We are seeing that integrated journeys properly has higher chances of success, having a higher success rate. Also, like Ankita said, that you have to have a sharp eye on wherever drop-offs is happening. Uh, there are the companies there are lenders who have actually built proper dashboards to track even a single data point where they see that the drop-off can happen, and eventually when you are doing business and 1,000 crores, 1,200 crores, even 1% of the success rate has a huge impact. So a proper management and a funnel view access can actually help you to take the right decision towards correcting the journey and bringing it at par with the companies who are seeing a higher conversion rate at a level of 70 plus. As I said, the AI adoption, you have to see it as a growth lever, and it has to come from the top. Top leadership the companies where we are seeing higher success rate. One thing which we can clearly see is that the top management is driving the adoption. They are tracking each and every salesperson, what is the number of cases they are getting account aggregator journey with. And also they have a review. The account aggregator option is part of their KRAs, and also they regularly review them, check dashboards, and this is how at a top level they monitor, and so that the last mile this adoption can happen. So what I did was I've just noted down the life cycle of AA journey, starting from FIU screen where the customer is being asked, shown the ways of data sharing till the data is fulfilled. So I'm sure that these stages are well aware by you. Well, you are aware about these stages. To start with, and I will talk about at each stage what all good things or the best practices you can do to ensure that the drop off reduces. For example, to start with, when you are giving an option to a customer to share data using account aggregator, you have to actually bank selection at the FIU page really helps. So if you get to know that a bank which is selected by the customer is not an account aggregator, so there is no need to direct customer to a page and ask him to uh, create a handle. So that is something which really helps lenders to increase the conversion. Also, we see that, and we all are aware that the coverage across each A is different, and not all account aggregator has 100% coverage of in terms of total FIPs which are present on account aggregator. So you have to ensure as a company, as a lender or FIU, that you tie up with you at least tie up with multiple A's so that your full coverage of FIPs in the ecosystem gets completed. Also, now a new service which has recently seen is through because around 10 to 12% of the population now have experienced account aggregator. We are expecting that there are existing AA handles which now will start coming up. So if a service which can offer a mobile number based discovery that the customer has existing handle with particular A, then you can direct that customer to that A and make the journey more convenient, because now if he has existing AA handle, the chances that he would have linked his primary bank account to this account aggregate handle will be high, and you don't need to ask customer again to create a AA handle and then link bank accounts and share the data. So that is one more convenience which will get added once this is adopted across. Uh, Also, checking if you're not having multiple AAs on board, so at least checking if the customer with if he has selected a particular bank, and you have to do a matchmaking if the AA which you are live with has is now enabled with that particular bank, then only you have to direct customer to that particular to account aggregator. Otherwise, you can skip this. There is a SaaS API or health API check which gives you the performance of different APIs across FIPs, so that you can take a wise decision. If for example, if the customer has selected uh, one bank X, and and it is present on the AA which you are live with. Now, using this SaaS API, you can actually check if what is the performance across different APIs, and if there is a drop off you are seeing or the performance is not up to the mark, you can skip uh, customer directing to AA in these cases as well. Also educating customer about AA, because there it is a three-step process, and many a times when customer is redirected to a new journey, new page, where the customer also gets panicky, and he might drop off, because considering that he started with journey A and now he's that redirecting to the other to the other screen. So as a FIU, you have to ensure that you are before redirecting, you are ensuring that the customer is aware that it would be a three-step process, what are the steps, and also educate him about it is RBI authorized X or other education about what account aggregator is and how it will help. So these all things really help in reducing the drop-off. So we are working with Axion, and for the industry, we have tried developing common shared resources. Like we have built demo some training decks. We have come up with videos and vernacular languages. Right now, there are two languages, and also pamphlets, leaflets for the industry to use directly. So we'll make it available on our website maybe by this end of this month. You will have access to all these uh, content which you can readily use wherever possible. We have also worked with Axiom to build a reference journeys for your linking, discovery, consent screens, which will also be available on the website by end of this month. Also coming on to the other stages, which is linking, registration, we have also kind of standardized the messages which comes to you. For example, if you see in red, it's one of the message with giving a small context and putting some trust markers even in OTP adds a lot of value, because we are all aware that RBI and the other education which is happening, that you don't need to share in your OTP, and people are afraid of OTP. So how we can make these through trust marker, remove that fear of customer on OTP and use it. So I've written in so the OTP is also we have standardized and we'll make it available on the website. So this small things actually can give you an extra 1 or 2% of conversion. Also, now many of the customers might have multiple bank accounts and which they have linked to the account aggregator handle. Uh, so proper stitching this journey when you are linking different bank accounts, and it has to be in a sequential manner so that the customer don't get confused like what OTP has to be entered where. So sequential OTP is another thing which we have seen really matters a lot. Coming on the informed consent, uh, so as I told you that Sahamati has worked and come up with the fair use templates where we have standardized the template parameters, and where it has the upper edge of whatever maximum range is possible. So you have to ensure that whatever consent you raise and the parameters which are shown to the customer is as per the prescribed limits, and it is not violating that limits. Because if you are doing so, there are chances, and I'm sure that account aggregators have already implemented this. The account aggregator will reject these consent, or maybe later on, the chances is the FIP may also reject these consents, which violates the fair use guidelines. One other thing is when you are linking multiple FIPs and you are keeping it in a single consent, there are chances that the drop-off may increase, because what happens is if the multiple FIPs are linked and consents are capped in a particular consent artifact, if there are three banks, for example, even if two banks provide the data to A and third bank doesn't provide, the data failure will happen. So if there are three FIPs, we suggest that you create three separate consent template, and which will reduce the drop off and also give you a more control when you want to request only data from one of the FIPs. Also, we are seeing that many a times the customer accepts the consent, but the rejection happens at a FIP level. So we request that maybe there are chances if the customer can be kept on the AA page until the consent is accepted. If it is rejected by the FIP, you may give a customer another option apart from AA to maybe download another thing to get the data. Also, uh, mm, and also one other thing can happen is the A's can also might retry checking if the consent can be accepted by a FIP. So on the fair use violation, on the right hand side of the screen, you can see a correct template which has proper consent parameters kept. We are seeing and highlighting these to the regulators and also to the companies where we are seeing some violation happening. Like on the left hand side, if you see at the bottom, this is how the consent was captured. This is not as per the spirit of account aggregator and how the guidelines has been built by the industry. Similarly, at a consent page, you should clearly have a reject and accept option. Here, it is just the information which is being shared. So these are the bad practices which should not be there, and we should ensure that the consent notice is displayed to the customer in a way that it allows customer to explicitly accept or reject the consent request. At a data fetch level, there are some banks that permit some retries in terms of technical failures. The system should be capable enough to uh, handle these scenarios. And in a non-STP journeys also, what happens is because the health API provides you access to different APIs of at a intelligence or at different APIs across FIPs. In case you don't require it immediately, you don't require the data immediately, you can actually at a consent stage, you can take the consent initially and check when the consent success rates, data fetch rates are higher, and then only ping the FIP to get the data. So these all customization can really help you customize, can increase the success rate across the AE journey. So these are the resources. I've linked the hyperlink of uh, all the links where you can find these resources. And as I told you that whatever work we are doing with Axiom, these are common goods and resources which will really help you in terms of increasing the adoption. We'll make them available on the website and share the details with you. So that was from my side now. Uh, I think we are running 12 minutes late. What I'll do is we can quickly start with our next TSP, and then at the last we can take up the questions and answers so that we are following the time and everybody gets chance to speak. So I'll invite Shashank from Perfios team, who is a product manager and looks after account aggregate implementation. Shashank, you are there?
Yes. Yeah. Hi, Abhishek. Hi, everyone.
Shashank. So just a minute. Can you, yeah, Shashank, you want to go ahead now? Do you have a share access?
Sure. I have shared access.
Okay.
My screen is visible, right?
Yes.
Yeah. So, hi, everyone. I'm Shashank from Perfios. So we at Perfios were looking at where are the places that we can increase the success rate. So uh, uh, there are many things that we have already implemented, what the Sahamati has suggested and all of it. So using the data of the ecosystem and other our Perfio's own data as well. So we have come to these these modes of bettering, like making the success rate better. Okay, so so FIP health. So as you are already aware that we have SANS data, but we do not completely rely only on SANS data, but we have data from other AAs as well, and we have data from other like we have Perfio's own data where we have data from our own FIUs and our own FIPs. So from this we figure out the downtimes of FIP. So we do it at an API level, and why after getting those details at an API level, we use it to decide whether we should go with an account aggregator transaction or not. So this is like we have got the inspiration from UPI. So whenever we go to pay, and if that bank is down, it will show that there is no Axis Bank, or one of the account is not working. So please try later or with another bank, right? So that is the inspiration that we have. So if the CBS is down, that means going to an account aggregator journey will not get you a success rate at all. Let it be consent or let it be data fetch. So what we do based on this data is we get these details at an FIP level. We create a threshold and health indicators. So each business unit of a FIU might need different thresholds. So let's say an FIU is a PFM use case. For them, the consent is the most important. Data fetch can be done later as well, whenever the FIP is up and running properly. So, but in an underwriting journey, journeys are, all the thresholds will be higher. So it is completely customizable. So it is completely no, there is no change of integration for an FIU. It's completely maintained by Perfios. So we give thresholds of true or false. Should the journey be with account aggregator or not? And we have our other sources for what is the success rate of other modes as well. So we kind of give the best possible mode to the user. So we have seen that there is reduces up to 8%. So here it is not increase in success rate directly, but it is not taking the journeys into AA mode when it is not working. So, and this overall the user experience becomes better, that there is no failure here. And yeah, we have seen in this like this is proactively we are routing it not to A, but most of the FIU still prefer account aggregator as a mode. So that will be the preferred mode of data fetch, but that will only if there is a success rate for it. So the whole flows have been decided, like integrated in a manner that there is no change at an FIU level. It is all maintained by us with a few minor changes or like a configuration that they have to do. So this is a sample of how it looks. So let's say you as a user has selected, you have these three FIPs, bank accounts that you have, and this is recommended based on the threshold. So if all the three are aligned to the threshold, we show you the bank statement via OTP, which is the AA route. A route. So recommended, and these text can be customized for each FIU differently. And the other modes are also still being shown, but it is recommended, and some of these modes are pocketed at some cases. And let's say these are below the threshold, so account aggregator is temporarily unavailable, or some FIUs prefer not to show it at all. So these are the differences in the threshold. So we don't only use SANS data, we have our proprietary data here as well, which we derive these details from. Then comes to our A routing. So as you already mentioned, that not all the coverage is there with all the A's at that point, right? So what we do, we have a system that the client does not need to pass anything in difference, or they don't need to select or anything. So they just need to call our APIs. We internally decide based on what is the success rate for that A. So we have multiple decision metrics. One is availability, which is the coverage, and then we have the A performance pattern. So we with our extensive data of Perfios, we realize what is the success rate for that A at a point, or is there any downtime for that A. Then if there is a downtime, we skip that account aggregator, and then we have our own mapping between which FIP is working better and best in the last few minutes or last few hours, or in historically how it has been working, which is a better A to choose for this journey. And then we have a priority list as well. So let's say there is a same, like both two account aggregators are working the same way for an FIP. we give the choice to the FIU to decide a priority list based on their interest. That will be the mode it will go to. So we found a small thing that whenever there is a routing in an assisted journey, right? When it is going through an second account aggregator, which the RM is not aware of, uh, they kind of drop off the journey. So we sent them PPTs and we sent them documentation of it might go to these are the account aggregators and these are the screen it looks. So the RMs were also trained for this and we helped the FIUs to do that. So A routing has increased the consent success rate up to 6%. And this will without any problem in adoption, this has been taken through. And as we know, all account aggregator, or most of the account aggregators are already on fair use policy right now. So we have a dashboard where user FIUs can use, where they can directly choose the consent template they use. And there are some other parameters that they will need to fill, probably FI types and all of those. So we directly use the consent template to call the account aggregators. Like the FIU chooses the consent template and we change it to the rabbit pattern and call the A. And what we kind of try to do is we intelligently select the best A for that particular FIP for that particular time, which will increase the consent success rate. And coming to data fetch success rate, we have implemented something called as the data fetch retry, where even in an underwriting journey, we have a spare consent that we would have taken in case that there is a technical failure during the data fetch process. We retry the journey without FIU to have to do anything, depending on their journey. If it is like a user live journey, the retry timing will be lower. If it is a journey that they have time and they can show a pop-up saying that we will get back to you within 3 hours or 2 hours, we retry based on their config and then achieve this. So basically consent success rate, we are trying to improve by choosing the health of the FIP to choose AA or not, and then we are routing it to the best AA. Post that in data fetch, we are having a retry mechanism to increase the total overall success rate. So anyone has anything? Thank you. Thanks, Abhishek.
Shang, you are done? Sorry, I had dropped in mid.
Yes.
Right. Okay.
Yes, Abhishek.
So now I'll want to call Arpan Adarsh, who is head of Bank Connect at Finbox. Arpan, you are there?
Hey, hi Abhishek. Yes, I'm here.
Perfect. You can go ahead now.
Perfect. Hi everyone. Little introduction about me. I've been with Finbox for over 5.5 years now. We have been building this product, which is called Bank Connect, for the last 8 years. It started in 2019. Right now, on the Bank Connect product, it's mostly on the account aggregator piece, since the industry is moving towards that. But overall, Bank Connect is solving overall consolidation of document collection and processing of those documents, with using account aggregator, as the top source for collecting these data points. So Ankita and Shashank has talked a lot about how to increase on the success rates, and what are the strategies that both from a consumer point of view, Ankita said, and from a vendor point of view, Shashank also explained. I'll just deep dive more on some other points as well, more on from the application points. We'll definitely talk about the strategies that we take to increase the success rate and how does the number look like in case of Finbox. But which are the different kind of stakeholders which are using account aggregator right now, and all of these different stakeholders are different pain points. Like somebody who's working in a digital team versus working in a risk fraud team would look at account aggregator from very different point of view. So I'll not keep my presentation only fixed on increasing the success rate of the of the product, but also talk on other points. So I'll just share my screen. Have to Abhishek, I'll just have to drop off and quit and reopen.
No worries. If anybody has any question, meanwhile, you can ask.
Yeah, hi, this is Soros. Can I ask a quick question?
Yeah, sir.
Yeah, so I was actually messaging on the chat box also. So is there any future plan to allow non-regulated entities to have any access to AA journey? I'll tell you why, because what we find is it's decent amount of customer onboarding is happening with co-lending platforms who are non-regulated, and similarly in banking side, DSAs and everything. And since there is no access to AA, these platforms are still left to do this phygital system. So that's where I wanted to understand if there is any future plan where this can be done in a secured manner, where such entities can get such access.
Yeah. Sorry, Arpan, since you left, I thought we can use this opportunity to answer it. So, Saurabh, we can connect separately. Right now, the only way out is if you see on ONDC Financial Services,
Sure.
there is a ALSP which kind of interact with AAs, but it is just a redirection which is happening from LSP to AA. Otherwise, right now, there is no way of the non-regulated entities to access account aggregator, but we can build a case and give a representation to regulator on this. So
Okay.
this is the current stance.
Got it. I will try to connect with you separately and we can discuss.
I'm okay. Perfect.
Thank you
I
so
share
much.
my number here.
Sure. Thanks.
Okay, perfect. I hope Abhishek, my screen is visible.
Haji.
Take care, sir. So just give a little quick brief about Finbox. So Finbox has been in this space for more than 9 years now. We are building products majorly on two sides: on the infrastructure distribution side of it, which is the LOS, business rule engines, loan marketplace, which connects LSPs and lenders. On the other side, we have risk management tools, wherein we have a device-based underwriting platform, which is called Device Connect. We have a bank statement analyzer, which is called Bank Connect, which connects with Account Aggregator. We have a multi-bureau connector. So we have a suite of product which you can use to sort of launch a lending program. Quickly move ahead, introducing Bank Connect. So it's been more than 8 years since we have launched this product. Today, there are 3-4 modes through which you can collect bank statements of the customers or other documents, financial documents, including ITR, GST. The customers can upload bank statements manually by uploading PDF document or by putting in the net banking credentials or through the discussion of today's, which is the account aggregator method. Now, Finbox's account aggregator setup, we have integrated with multiple account aggregators. There are 4 account aggregator partners which are already live with the platform. We process up to more than 10 lakh to 12 lakh cases via account aggregator in a month. One Money, NADL, Safe, and FinView are live with the platform, and Sahamati's integration is progress. Also, these are like the top 5 account aggregators in India, which does most of the transactions. While there are 12 more account aggregators, but we don't see the benefit of integrating with everyone. Now, in this overall multi-account aggregator approach, the success rates that we have, the maximum success rates that we have been able to reach is around 82% with Poonawalla FinCorp. They just use account aggregator and no other mode with Finbox, and the success rates have been tremendous. Some of the few things that, apart from the strategies that Shashank and Ankita explained, we have also built like a success first multi-A routing, which means when the customer chooses a particular bank, we see if any of the account aggregator partner is giving success rates above a certain threshold, and this threshold can be 80%, 85%. Only if it's true, we show account aggregator as the default option. Otherwise, we see that the drop-offs increase in the journey. If 1 or 2 times the customer tries with account aggregator and doesn't work, the customer might drop off completely. So just on the just relying on the success rates of the account aggregator, we add a layer on top of it as well. And see if we should show account aggregator as the default primary option for the customer to try before even choosing or selecting between different options. So since Finbox adopted account aggregator around 2022 when Sahamati started and account aggregator P started, we have a lot of FIUs which are still on a single account aggregator. They have not yet signed NDAs with signed addendums with other account aggregators, while we have a lot of FIUs which use our multi-account aggregator setup as well. And hence we are able to draw this comparison very well between both of these FIUs, where the drop-offs happen, what are the success rates between an FIU which uses a single account aggregator versus an FIU which uses a multi-account aggregator. And this is how some numbers look like. So without a multi-AA smart routing, we see that the data fetch success percentage is around 60%. That means number of customers who essentially started with the first OTP versus the number of customers who were for whom the data was fetched. Without a multi-AA smart routing, this is coming to be around 60%. Specific consent to data fetch rate, the number of customers who gave consent to the customer's data that was fetched, this is coming to be around 82% in a single account aggregator setup. With a multi-AA smart routing, we see this number changing, data fetch success percentage changing to 78% and consent to data fetch to 94%. Beyond this, now the data is fetched, not all the data is directly usable. Now we see that there is a lot of discrepancy in the data as well that is fetched by account aggregator from the banks. And this is obviously improving with time. The percentage of it is improving with time. But typically what we see is that if 100 customers data is fetched, 80 customers data would not have any problem. It can be directly consumed. 30% of the overall data fetched from account aggregator is corrected by Bank Connect. We have found some common inconsistencies in terms of repeated transactions. The balances are not available. So we are able to correct these transactions and we are able to pass it on. Obviously, this is all done with with correspondence with the FIU. We discuss all of these things before implementing the solutions, but we do have the solution. So 13% of the overall data which is not being processed today can be corrected with logics, and we have identified that, while the 7% of the data still remains unusable. So this is some advanced analysis that we have done on the data, on the success rates that we see. Success rates from first OTP to data fetch versus consent given to data fetch, and what percent of the data fetch is actually usable versus corrected. Okay. I'll move to the next screen. So on this screen, I have tried to essentially break down the journey into specific steps, and without a multi-AA smart routing and with a multi-AA smart routing, what does the numbers look like across each of these steps? So where does the typical drop-off happens for a customer and all of that? And these numbers, those numbers that were there on the last screen were essentially supported by this data itself, that the data fetch to success percentage is coming to around 53% without a multi-AA smart, and 73% for consent to data versus 77 and 94 with a multi-AA smart routing. And a lot of this is being dropped off on account not found. So when the customer essentially
give me both options. If company gets eligibility, why you want to consider my income?
Sorry, yeah, I think you have to mute yourself.
Sure.
No, I am not able to mute him. Yeah, Arpan, go ahead.
Yeah. So primary things that we found was in the industry and how we were doing is different. Abhishek also presented is that when we give an option to customer to choose the bank first without doing a self-discovery of accounts, the success percentages increases. We are able to take more informative decisions. When the customer chooses a bank, we know which bank to discover. And hence, across all the different account aggregator partners, we are able to see exactly what success percent this particular account aggregator is giving in the last 2 hours, 3 hours for this particular bank. I think primarily because of that particular decision, the success rates increase a lot, and all of these things, account not found percentage, all of that stuff is taken into consideration. Few months ago, we saw that, for Kotak Bank, a lot of these accounts were not being discovered only with certain account aggregators, right? So these things are being taken care of while not just looking at the success percentages, but also looking at this, specific data point that, okay, with, let's suppose, account aggregator X, account not found percentages was 1%. With account aggregator Y, this is A plus 2%, etc. Now I'll move to the second part. So until now we were discussing, what are the strategies that we have taken, what the number looks like in the account aggregator and a multi-account aggregator approach that we have taken. Now, different customer personas who are using this in the lending space, typically there are 3 customer personas that I see. The first team is sales and distribution team, digital DSAs, branch managers, etc. The second is the primary, customers who are the credit risk, RCU underwriting teams. And the third is digital product team, which is, sort of increasing now. And all of these 3 teams have different problems to solve. We'll go through them each one by one. So for a sales and distribution guy, now not all the loan programs are not all the programs are digital. So there are a lot of programs which are branch led, where the consents have to be taken, offline setup from the customer, etc. So there are a few things that we have implemented. We have implemented a credit link sort of a feature wherein the sales can generate branded or loan consent links via our dashboard that we have created, and they can WhatsApp and email that particular link to the customer, and this link opens independently, from the entire lending loans, steps that you have. So the customer is going to just complete the account aggregator journey or the banking journey overall on that link, and you are going to get data on your dashboard as well as if you have integrated via APIs in your LOS. So this is one. It essentially decouples the sales team from, having a digital journey in place to collect account aggregator consents. Second is we have created some stage and funnel visibility, which I'm going to show you how does this look like. The third is for RM assisted upload. So if AA pulls fail, the regional manager or the case manager can also upload documents then and there itself on the dashboard. We are talking, on an average, we are talking 70 to 75% success rate on account aggregator. Still, the 25%, 25% customers cannot be answered. So it gives an automatic push to you to upload bank statements for those customers. And there is a self-serve sandbox, for quick POC. So different regional managers can, like we are doing certain programs with different banks right now to test how account aggregator adoption in these phygital channels work, like, on a call, can I take account aggregator consent? So we are building, journeys across this as well. So the first persona is sales and distribution. The second persona is credit risk, RCU, underwriting. All of these guys typically look at the data which is collected by account aggregator and how it's analyzed, with the current setup of TSPs. So they would be interested in a unified underwriter console, structured output across. If the statement is uploaded via PDF or net banking or account aggregator, one structured output should be available. We create like a Bank Connect score, which gives you its like bureau score. There are rich exportable reports that you can download from the dashboards. Loan data correction and regeneration. This is again a very important feature that we have come across, that typically in most of the cases, if the customer, and business loan cases, if the customer has to upload a bank statement via either account aggregator or PDF upload. In account aggregator, yet the overdraft limits are not available. So if the overdraft limits have to be, these parameters have to essentially be filled in after the case, the account aggregator pull has happened. So in that case, a lot of these teams typically regenerate the reports manually. They have to do the calculation manually. While on dashboard, they can just come update the values, and the report can regenerate all over again. And then there is obviously fraud detection with syndicate fraud. Specifically, syndicate fraud is increasing a lot. So also on top of account aggregator data, we see without tampering the bank transactions, a lot of customers are now able to do fraud. So we're also building solutions how to mitigate fraud on top of account, even on top of banking transactions, be it fetched via PDF or account aggregator or any other method. And the third team is the digital product team. Now these teams are typically looking at journey optimizations, funnel conversions, how to use account aggregator data that is being collected across multiple channels in a more efficient way. I'll give you an example. So, a big bank would acquire customers from multiple channels, and probably all of these channels have integrated with account aggregator individually, right? So bank now have started feeling that we are getting a lot of data about the customers across different channels, but there is no system to sort of consolidate it. So we are building like a customer data platform that integrates customer data across different channels that is being collected. They get deep funnel analytics on where the drop-offs are happening for funnel conversions, etc. They can customize the UI, like Ankita said, and also Abhishek mentioned that small changes to create trust definitely works on the conversion. So white labeling and UI customization is there, and cross-sell and triggers are something that we're also building on top. Specifically about the new products that we are building on top of account aggregator right now. So there is PFM. We see that now PFM is not just a hobby project that banks and other players are looking at. It's more of it's being adopted in very different ways, and most of the banks are now focusing on building a PFM journey through to collect data of the customers for other banks as well, and to cross-sell in more meaningful way. Previously, the decisions to cross-sell was more scattered. I think this PFM application is actually made realize all of these stakeholders that cross-sell can happen in more meaningful ways. So the PFM platform essentially gives you access to all type of data assets that's available on account aggregator today. Banking, mutual funds, stocks, these are the primary three ones. Insurance, I think, is still will take some time. Deposits are available. NPS is available. So the PFM product, essentially, it's a complete SDK wherein your customers can give consent in one go, and you'll be able to visualize the data of the customers would be able to visualize their data in a single dashboard. The underwriters or the digital teams get a dashboard in the background. They are able to create triggers. They're able to create EWS systems and cross-sell parameters on top of it more efficiently. A lot of people talked about loan monitoring and early warning systems. Now, this is, I think, going to be one of the top applications of account aggregator going forward. Underwriting has been adopted widely, while loan monitoring and early warning system yet needs to be adopted. A lot of banks and NBFCs have yet not adopted it. But with account aggregator, you get access to recurring consent of the customer. And with recurring consent, there are two types of recurring consents. With one recurring consent, you can get access to customers' transaction data up to 5 times a month. And the second time of recurring consent, you can just get access to customers' balance data, the balance in time of the customer. So with the transaction data, you can build a lot of parameters to essentially know if the customer's stress on financials is increasing, if there is a chance to default, customers' income is going down, loan obligations are going up. So all of these things are part of the EWS system. Then the collection optimization is, I think, the most important step I feel every banks and NBFCs should adopt. It is a great ROI for businesses. Just to give you an example, today for each how NASH application works is that for every NBFC and bank, there would be a default date on which the NASH applications, the NASH presentations would work. If the NASH presentation fails for some customers, then the repeated NASH presentation happen on specific dates, like for a particular NBFC we work with, they present Nash applications on 3rd. For the ones who for which it failed, they would present it on 5th, 10th, 15th, 20th, 25th, and 30th in this order. Now, whenever Nash fails, the customer has to pay a certain amount. You pay a certain amount to the Nash vendor. The overall experience is bad. With the collection optimization, once the Nash presentation failed for a customer, you can simply first fetch the balance of the customer, and only if the balance of the customer is sufficient, you should do a Nash presentation. It builds a better experience for the customer. You don't have to pay to the Nash companies, Nash vendors, and you can also enable partial Nash presentations. So you would know exactly what the balance is. So let's suppose the EMI was of 10,000 rupees, the customer had 9,000 rupees. So you can probably put a Nash presentation of 5,000 rupees, 6,000 rupees, leaving some gap in customer's account as well, not completely drying it up, right? And you can also do this in bulk, like you can upload a bulk CSV list of all the customers for which you want to fetch the balances and then take this decision. So I think this is one piece which generates instant ROI, and I think everyone should do it. Then we're investing a lot in the customer data platform. It's essentially one single platform to see data across all of your customers, across all the different asset types that they have connected. It typically helps in two things: personalized financial offers and one view and real-time triggers. So I'll just show you how does this look like. So this is like a dashboard for for CDP. All the customers are mentioned, their individual IDs are there, which date the consent was taken, and what was the last date it was updated. As soon as I click on a particular customer, it takes me in and it shows me what are the different consents that the customer has given, what date it was issued on, what was the expiry date, what is the propensity score for the customer. On the right hand side, it tells me all the banking overview, average balance, maximum balance, and this is like a view for the underwriters, digital teams, product teams, etc. All of these things is visible. Then similarly, you see all the active loans of the customer. This can be fetched with bureau as well as with banking. You get to see all the transactions and where the customer is spending. What is the total asset of the customer, current value, and where all the customer has invested. And this is like a monitor screen wherein you can set up specific triggers. So if the bank balance is less than 5,000 for the customer, if the salary received is greater than a particular threshold, etc. As soon as these alerts are met, these particular rules are met, an alert is triggered to your system. And on top of that alert, you can sort of build multiple things. You can build an EWS system, an early warning system. You can build a system for personalized offers. You can essentially build system for better underwriting, how this customer is performing and what other loan products to cross-sell to the customer. So this is something that we are investing a lot since account aggregator adoption is increasing, and we see that lots and lots of data is being collected. How to use this data meaningfully is in the next steps. So this is on the CDP piece. I'll just quickly as well show how does the dashboard look like.
And just to, sorry, Arpan, I just want to add that right now cross-sell is not part of any template. So yeah, just wanted to clarify.
Yeah. So this is how, you can, we also show to our FIUs which account aggregators are working, what is the real in-time success rate for a particular FIU, which all account aggregators are supporting that particular FIU. You can filter it by the account aggregator specifically. You can filter it by the date. You can filter it by client. And you can see how does your account aggregator success rates are varying across different FIPs that are supported on your system. With this, you also get access to the funnel. I don't have access to that right now, but exactly on which step the customer is dropping off and all of that step. Since there was also, a point how dashboards work. So, I mentioned that you can generate link, you can send that link to the customer. So on our dashboard, we give you an option to generate a link. The manual underwriters or the offline team essentially just puts in a customer identifier. They put in all of these input dates, what should be the date range, etc. If they want to put a logo, all of that. If they want to pre-select bank for the customer, they can pre-select bank for the customer, and the customer will not be able to then select other banks, right? If they want to restrict the customer to a particular mode, they can also do so, and the customer will not then be able to choose another mode. So all of these things can be done, and this link can be generated from here. And typically when the customer opens this link independently, they are able to see a screen which is like this. So I selected Access Bank there. The customer will be then able to choose different account aggregators. They put in their phone number, the multi-A smart routing happens automatically, and then the customer journey moves forward. So these are few things that we are doing, specific personas that we are catering to and different problems that we are handling in the account aggregator space right now. Open to questions. That's all from my side.
Yeah. Am I visible? So, anybody has any question for Adarsh? I think Tamanna, we can get back to you on this question. Maybe Adarsh, can you just put your mobile number for everyone's visibility so that they can contact you if they need? So, anybody we want to have clarity on anything?
Yeah, okay. So Timana here.
Yeah.
See, yeah, accessing bank account, real-time account at the time of lending is fine. But as a consumer, I have a lot of personal things I do on my bank account. Why would you monitor that? Won't you think it'll get restricted under DPDP Act and rules because it crosses the line of my personal information? Because your purpose of underwriting me is over, and why would you like monitor my lifestyle? Then
Uh,
I'll be scared of borrowing from you. You want to monitor till I don't pay. I don't think you have any thing to do with my data, right? As a consumer, I'm thinking.
Timana, let me just, hi, this is Ruchi. We have spoken before also. I don't know if you remember. Allow me to intervene at this point in time. The fundamental thing that we have to remember about account aggregator framework, the regulated account aggregator framework, is this is a consented framework. The USP of this framework is it is consented, it is private, it is fully secured. So until such time you as a customer do not allow or give access to view your information and give you some product or service that you wish to avail basis the information in your bank statement, it will not be accessed. Right?
Correct.
So that,
Yeah,
right.
while
So,
borrowing, I give it. Later, I withdraw.
so anyway, if you go, Timana, if you go through the details of how the framework functions, you will understand that there is a consent template and that has been structured by Mighty. This consent template explicitly mentions why the data is being accessed, what will be the output once the data is accessed, how long will the data be kept, how long will the consent be kept. And another very fundamental part of this entire consent framework is that the data has to be utilized only for the product or the service the customer wishes to avail and is explicitly mentioned in the consent template. So, so it's full, the customer is fully aware, and this is the fundamental basis on which the entire ecosystem and the entire framework is developing.
And to add on, Tamanna, while working with the industry, we have finalized 3 templates that Arpan also mentioned. One is your underwriting consent, which is one time which get exhausted as soon as you have underwritten a loan and you have offered a loan amount to a customer. And there are monitoring and collection consent. Monitoring gives you a comfort of or accessing customer data for 4 times a month, 4 to 5 times a month. And there is a collection template which gives you recurring access of 1 pull per day, considering when you have defaulted. So 1 EMI bounce, after that you can use this consent template. The frequency has been reduced considering keeping in mind that the keeping in customer rights and data privacy rights. The other part to it is in DPDP it mentions about consent managers, and AA is one of the implementation of consent manager. And yes, we are also exploring how DPDP will have impact on consent manager. We'll come back.
Yeah, fair enough. I'm just saying, I've been a banker, I've been in the lending space. It's not going to sustain. Definitely not. Because the more the person is defaulting, more he's going to resist access to his information, definitely. So I think his information is more than the borrowing. Money is not everything for a life of a person, right? Like, any data, any personal information, it is under the right to life act, right to life article. You can't break that. That's why, anything will consent framework, everything is fine, but he says, I don't want to continue this, and he'll withdraw, and he can withdraw.
So the power of account aggregator right now is the customer has full choice. Even if he has given the monitoring consent, he can withdraw it later on.
Correct.
And eventually, it's like even the lenders are maybe in coming times will incentivize customer to get access to this
Maybe,
monitoring
yeah,
consent manager.
incentivizing might help. But
So
in
that is
business, I know that they are trying to permit, if I have an overdraft account, I have to surrender my peek into my overdraft account wherever I have across the 2, 3 banks. But personal, it's not going to sustain is I think my.
So, having said that, Tamanna, the way the country is moving is towards creating frameworks that are protecting the data of the customer and at the same time empowering the customer with their data to avail of products, services, not just now in the financial domain. Eventually, it will move to all kinds of sectors, right from health to transport to various other sectors. And I think it's a matter of time before when data becomes it completely empowers the customer and the customer is fully in control. But we heard you and we'd be happy to connect with you separately if need be. Abhishek has put his number in the chat box. Please feel free to connect with us anytime you wish to have a deeper conversation regarding this.
Sure. Thanks so much.
Thank you very much. If there are no further questions, we will just put our email ID on the chat box. Please reach out to us. And of course, Abhishek has been kind enough to put his phone number. We have Arpan's number as well over here. And I'm not sure if Shashank has given his contact number and contact details as well. Please feel free to reach out to the technology providers or to anybody in Sahamati should you have any queries.
Thank you, everyone.
Thank you very much for attending this session, and we look forward to seeing you all again next month. Thank you very much.
Thank you.
Thank you for
Bye-bye.
the space, Ruchi and Abhishek. Thank you, guys.
Thank you.
Thank you.